Everyone is trying to call the Bitcoin bottom right now. Cycle indicators are back in the conversation. MVRV charts are being watched again, and the 4-year Bitcoin cycle is suddenly everywhere on YouTube. But at the same time, another side of the market is warning that this may not be a clean bottom. It could be a trap before Monday liquidity comes back. That is why Bitcoin moving before Wall Street opens matters. This is not just another crypto move. When the stock market is quiet, crypto becomes one of the few places where risk can still react in real time. And when Bitcoin starts moving before the next full US session, it may be showing us where the market's stress is hiding before everyone else returns. The dangerous part is that the market is split. One side is looking at Bitcoin and saying the bottom may already be forming. The other side is looking at the Fed, regulation pressure, oil risk, and macro uncertainty, and saying the bear market may not be finished yet. That split is exactly what makes this moment important. The most dangerous market is not always the one where everyone is bearish. Sometimes it is the one where half the market is calling a bottom, while the other half is quietly preparing for a trap. The bigger picture is that Bitcoin is not trading in isolation anymore. It is sitting between several major forces at once. AI stocks and mega-cap tech are still trying to keep the risk-on story alive. But the Fed has also made it clear that markets may not get the same level of comfort and guidance as before. At the same time, oil and geopolitical risk are back in the conversation, and that can quickly change inflation expectations, yields, and liquidity conditions. This is why Bitcoin around the $64,000 area is more than just a number on a chart. It is a test of risk appetite before Monday opens. If Bitcoin can hold firm while macro pressure is rising, it may be telling us that liquidity still wants risk. But if Bitcoin starts bleeding before Wall Street comes back, that can be a warning that Monday may open into a larger repricing. This is the part many traders miss. Bitcoin does not need to predict Monday perfectly. It only needs to show us where risk is reacting first. By the time stock traders return, by the time futures volume comes back, and by the time financial media starts explaining the move, crypto may have already shown the first signal. So the question is not simply, will Bitcoin pump or dump? The real question is whether Bitcoin is confirming that the risk-on trade still has support, or whether it is warning that the market is walking into a Monday trap. After a quiet period, the first real session back can be dangerous. Traders return, funds rebalance, headlines get repriced, and what looked calm over the weekend can suddenly become very loud. For now, the map is simple. If Bitcoin holds, watch whether Nasdaq, AI stocks, and other risk assets confirm the same message. If Bitcoin breaks lower, watch oil, yields, and the dollar very carefully. Because Monday may not be about Bitcoin alone. It may be about whether the entire market still has enough liquidity to support the risk-on trade. This is not financial advice, and it is not a prediction. It is a risk map. Everyone is trying to decide if Bitcoin is showing a bottom. But right now, Bitcoin may be doing something more important. It may be warning before Monday opens.